It was a tough start to the week for most commodities. Wheat futures led corn to the downside, and sharply lower trade in soybean oil futures was too much for the bean market to ignore. Cotton prices sharply lower, live cattle mostly higher. Feeder cattle were mixed, and lean hog futures saw some hefty profit taking.
Live, pulling the ripcord on this week's coverage via Farm Journal broadcast. This is AgriTalk. This afternoon, we begin with a conversation with Pat VonTersch from Professional Ag Marketing. Later, Cary Artac from Artac Advisory and WickedStocks.com. And directly following the news, Jack Scoville from the Price Futures Group. I'm handsome newsman Davis Michelson, and now here's the host of AgriTalk, Chip Flory.
All right, Davis. Hey, thank you so much, and welcome to AgriTalk. Glad that you are with us on this Monday afternoon. How's the weekend, pal?
Really good. Really good. An exciting, busy Friday night for the wife and I, and then 2 days of recovery. It worked out just perfect. The math all lined up, my brother.
Love it. I love it. You know, when it takes 2 nights to recover, or 2 days to recover from a Friday night, that's got to be a heck of a good Friday night.
It's a good night. It was a good night. You betcha.
Good.
You betcha. How about
Good.
you?
Love it. Spent some time with my boy on the Mississippi this weekend doing some duck hunting.
Love that. Love that.
Yeah.
How's the river look, by the way?
It was
Is
good.
all right? Yeah? Okay.
It's up a little, but it's not what I would call good.
Okay.
I wouldn't even call it good for barge traffic.
Would you call it poor to very poor?
I might
Really?
call it poor to very poor. At least poor. I'd call it poor for barge traffic. Now, I did see a barge loaded up and headed downriver, so that was a good sign. It's good to see some of this year's big bean crop up here in northeast Iowa making its way down the river. At least I would assume that it was soybeans loaded there at Clayton, Iowa. So,
Very good.
All right. We've got a heck of a good show for you today. We've got Jack Scoville coming up here in just a minute or two. Then Pat VonTersch from Professional Ag Marketing. And at the end of the show, we'll talk to Cary Artac. I believe it was another new intraday high in the equity trade today, but that didn't do anything to help out the commodity markets. They were under pressure from the dollar and from the energy markets is what it looks like.
Yep.
All right, man, let's get to the news. What do you got?
Well, Chip, December soft red winter wheat futures opened slightly lower and firmed to spike resistance at $6 before falling back and ending the day on session lows. Today's close was the lowest since September 30 and was the first below short-term uptrending support. Chart watchers are looking for a test of support at the September 25 low of 573. The potential for rain in the winter wheat production areas of Russia, Ukraine, and Kazakhstan put pressure on wheat prices, but forecasters warn the forecast calls for just temporary relief from dry conditions there. December HRW wheat futures 14 and 1/2 cents lower today at 590. December SRW wheat down 13 3/4 to 585 1/4. December spring wheat closed down 17 1/4, 626 1/2 on your settlement there, Chip.
Yeah, let me check that for you. Yeah. The September down 17 1/4. Good grief.
Yeah, that's painful.
That was a tough day in that spring wheat market. We're constantly reminded not to make too much out of one day's trade in the dollar and the impact that it will have on the grain commodities. But the dollar is 400 points higher today. That had to put the ag commodities on the defensive.
For sure. Well, Chip, wheat futures helped to drag corn prices lower after trading just slightly lower at mid-morning. December corn, however, did gap lower and firmed to fill the gap before turning back to the downside. The low-range close was the lowest since September 20 and clearly violated support at the uptrend from the August lows. The rapid harvest pace in the U.S. and the forecast calling for mostly clear harvest conditions in the Corn Belt through the end of the week clearly has the corn market on the defensive. Traders also pointed to the outside markets with energy futures lower and the U.S. dollar index higher as sources of pressure on corn and wheat prices today. December corn futures all told 7 1/2 cents lower, 408 1/4. March corn down 8 1/4 cents to 424 3/4. July corn futures closed at 437 3/4, down 9 1/2 cents, Chip.
Gonna have to wait a day for the harvest progress update from USDA with Columbus Day shutting down the federal offices.
Sure. Well, soybean harvest in the U.S. Corn Belt has been uninterrupted, and bean prices have closed lower in 9 of the past 11 sessions as a result. November beans gapped lower in the overnight session, firmed to fill the gap, and then fell to post the first close below $10 since September 10. That was the lowest close also since August 29. Chart watchers expect a drop to test support at the midpoint of the August trading range near 975. Brazil's bean plantings reached 8.2% done, according to Ag Rural. That's about half last year's pace and the slowest since 2020-21. But beneficial rains are expected across much of central Brazil over the next 10 days, allowing bean plantings to accelerate. Sharply lower bean oil futures pulled bean prices to the downside. November beans 9.5 cents lower, 9.96. Jan beans down 9.5, 10.11 1/2. March beans closed at 10.25 1/4. That's down 9 3/4 cents, Chip.
Yeah, December bean meal today was up 20 cents, but December bean oil was down 143 points. That hurt.
Well, December cotton today was 118 points lower at 71.03. And quickly on your livestocks, cash cattle trade was higher last week. Box beef prices were higher again this morning to help support live cattle. December fat cattle today, 35 cents higher, 187.92 1/2. Novi feeders, 22 1/2 lower, 249.57. And December hogs, $1.85 lower, 75.80. Some technical pressure there, feels like, Chip.
Yeah, it sure does. All right, let's bring in Jack Scoville, Price Futures Group. How you doing, Jack?
I'm having a wonderful day. How about you guys?
I'm just fine. Better than what we saw in the corn and bean markets today. What's going on there, man?
Well, I think, first of all, there's no USDA reports today, so we're all left guessing as to what export inspections and crop progress really is. But I think we had a hangover left over from Friday, and I think there's some concerns about demand showing up being quite as strong as people are thinking, especially from China, to kind of keep the market under wraps here as well. So, plus Russia, nobody knows whether Russia is really going to make pricing pretty strict stick in the wheat market. That's spilled over into corn a little bit as well. So all in all, just kind of a low volume affair, but not a real good reason to buy. And so down we went. I think we'll find some support pretty soon, but obviously not today.
Yeah, not today. So I made mention there during the news that, we're not supposed to put too much emphasis on one day's dollar trade in the dollar index, but 400-point gain, I mean, that's got to have something to do with it, doesn't it?
Oh, yeah, I forgot to mention that. Certainly it does. And, and what's more important is what the trend is doing in the dollar index, of course, which is actually looking kind of positive here. So new high for the move, and so that's going to keep the market under a little pressure as well.
Yeah, it certainly will. It'll make it a little difficult to generate any upside momentum there. Thanks, Jack. Appreciate it. That's Jack Scoville, Price Futures Group. Coming up next, we've got Pat VonTersch from the Professional Ag Marketing.
Do you suffer from talking on the radio phobia? No problem. Send us a tweet at #AgriTalk.
Davis, sometimes I wish there was tape rolling during the commercial break to catch the conversations that we have, and there are times that I'm glad that it's not rolling, and this was one of those. I think we might have lost Davis over the whole deal. Good.
Wait, I'm back now. What happened? Hi, everybody. Welcome back to AgriTalk. We're totally know what we're doing. Huh?
It's all good, man. You're back. That's all that matters.
Okay.
That's all that matters.
Good.
All right.
What can I do?
No, nothing. You are absolutely just perfect doing what you're doing. All right, let's bring in Pat VonTersch, Professional Ag Marketing. How you doing, Pat?
I'm good, thanks. But we all want to know what we missed out on.
Just a couple of duck hunting stories there, real quick. That's all it was. That's all it was. How's things up there in Southwest Minnesota? Jeez, there in Southwest Minnesota.
Things are going well. As I guess the case may be for the good portion of the Corn Belt, we've had a wide open harvest up here too, and the pace at which we're working through soybean and now corn harvest is just amazing, and so it's an incredible testament to today's ability to get this crop out of the ground, but also the long hours and effort that everyone is putting in here. So no breaks in the action and all of that. And harvest is progressing along nicely.
Yeah. Normally that would mean that there's a big break in basis and basis gets really ugly. But as far as I can tell, that basis level up in north central, northwest, and in southern Minnesota, a crash like I would expect in basis with harvest progress as quick as it is hasn't happened yet. What's going on?
Yeah, absolutely. And I, especially in this area of the world, and Chip, I've traded this market for more years than I care to count these days, but it's amazing how little we've seen as it relates to basis levels widening out here. And it's certainly part of the investment in on-farm space through the years is part of the reason why, but just the uptick in demand, ethanol and livestock, and how much corn and soybeans, for that matter, that wants to disappear from this area of the world domestically is certainly part of the deal. But the last part and probably the most important part, Chip, is that we've just got a lot more variability in production up here this year than other parts of the Corn Belt. And boy, that early, all that moisture this spring really impacted our planted acres, and it's impacted production from there. And then we dried off way too much here in the month of August. And so, we've certainly kind of got the double whammy here and are impacted by production. And we see that in the state-by-state breakdowns on Friday's report as well.
Yeah. We will definitely get to that. That corn crop, when we went through their third week of August, Pat, you could tell that it was in trouble. The bean crop, I thought, okay, it's still got a chance, but it didn't rain from the end of August on. And that's got me really concerned about that bean crop. What are you hearing?
Yeah, for sure. We were kind of joking the other day. Someone said, I heard that September was the driest September on record. And I was like, well, it had to at least be tied. It was zero. So
yeah, it was zero.
Getting around that. No, that's exactly right. And the bean yields that we've been hearing, we initially, the early bean yield reports, and this would have been against some of those farms that were planted early planting in April, there were really pretty good, slightly better than expectations. But boy, as we went through harvest there, it just kind of continued to tail off. And so no doubt that last half August, September dryness impacted our productivity up here.
Yeah, shoot. Yeah, the area is going to be corn deficit, isn't it? With all
for sure. We've seen in a few regions to the south of us. You have to get into northwest Iowa quite a ways before we've seen really any basis indications that all of a supply push. Certainly around here, folks are fighting to try to get full, at least that first elevator or first end user, and so it's going to keep premium levels, basis levels tight here all the way through. Now, one thing about how amazing this market is and how it works, we'll start to move stuff around a little bit, and maybe the basis levels will equalize more, particularly in the Western Corn Belt, but it's going to take some time.
Yep. Cash market is an amazing animal, Pat. It finds a way. It finds a way to reallocate resources throughout all the end users, and it'll find it again. And when it does, you're exactly right. I would expect that basis pressure that I was expecting to see by now will probably finally develop. Okay.
That's right.
Right.
Yeah, and there's there'll be some non-traditional movements. Grain will flow the wrong direction a little in a few cases here to make all that happen. But that'll certainly be the case.
That's right. Okay, takeaways from last Friday's USDA crop production WASDE reports. Anything in particular?
Well, I mean the emotional observation of taking the corn ending stocks number under 2 billion barely is I think kind of helps today's market notwithstanding, helps the psyche just a little bit here. But I do appreciate that observation. I mean, we're going to end up with production year over year surprisingly similar on 4 million less harvested acres. And so that observation of productivity, I think, is important. But I would also just say that, an under 2 billion bushel ending stocks number or a 13% stocks to use ratio, those are comfortable numbers, but we're starting to be on that fine line between needing to pay just a little bit more attention to the next weather concern or forecasted event or China activity or any of the array of things that this market wants to pay attention to when we're looking at internal fundamentals. And so I think the corn complex is going to be in a situation where it can be a bit more reactive to any fundamental developments that might come forward here. But we do have to recognize that when we're talking about a 13% stocks to use ratio, that we're talking more about selling rallies or top end of trading ranges and thinking more about how a good marketing plan worked from 2014 to 2019 versus what we saw the last couple 3 or 4 years. And so so that's the reminder, maybe not necessarily a new takeaway, Chip, but certainly worth noting. And then a little bit of the state by state breakdown. We did take some yield out of a couple of those Eastern Corn Belt states and kept both and kept it a little bit stronger here in Iowa, a couple more bushels in Iowa, kept Minnesota unchanged, which I think is a little bit of a question mark, and same with South Dakota, but that's more of a reflection of the thoughts that we were discussing earlier about some challenges up here in the extreme Northwest Corn Belt.
Yeah. Yep. Okay. What about the balance sheet on soybeans and the stocks to use ratio and the price that we're at now? Does that balance out for you?
Well, soybeans is the tough one, frankly. I mean, we didn't change projected ending stocks at all domestically here. Still at 12.5% stocks to use, 550 million projecting ending stocks. But it's the world ending number that is concerning here. In fact, a record projected at just short of 34% stocks to use ratio. And so the soybean complex is the one that we should be most concerned about, frankly, and is the one that we're going to keep in a real close eye on as it relates to South American production prospects. And so in that 34% projected stocks to use ratio number, Chip, is a forecasted nicely sized South American crop. And that's why we were able to put as much premium as we did in the soybean complex leading into the first part of the month here, was the lack of moisture in the Mato Grosso region of Brazil, which you guys have covered today. But we've definitely put some moisture back into the forecast down there, and likely some planting progress to occur. And so the bean complex is certainly a bit more burdensome as it relates to projected ending stocks here. And I tell you, through the years, it's been tough to flex back into soybean demand. We can find some more corn demand with lower prices, but it's tough on soybeans.
It is. No question about that. Yep. Brazil at 169 million metric tons for the 2024-25 marketing year. We're going to talk a little bit more about that, and then let's talk China coming up next.
Services.
Let's go to the markets page at profarmer.com and check today's closes, where December HRW wheat futures were 14 1/2 cents lower at $5.90. December soft red wheat down 13 3/4 to $5.85 1/4. December corn futures 7 1/2 cents lower at $4.08 1/4. March corn down 8 1/4 cents to $4.24 3/4. November soybeans 9 1/2 cents lower at $9.96. Jan beans also off 9 1/2 to $10.11 1/2. December cotton today was 118 points lower at 71.03. On your livestocks, December fat cattle were 35 cents higher at 187.92 1/2. November feeder futures 22 1/2 cents lower to 49.57 1/2, and December lean hog futures $1.85 lower today, 75.80. Visit tryprofarmer.com for more.
Opinions expressed on AgriTalk do not necessarily reflect the views of Farm Journal Broadcasting, affiliate stations, or sponsors. Knowledge is power. We're here to charge your batteries. AgriTalk.
We're in the middle of a conversation with Pat VonTersch from Professional Ag Marketing. We've covered the supply and demand crop production reports that we got on Friday from USDA as far as from a domestic perspective, and just started to get into the global stuff. And you're right, Pat, you look at those global numbers on the carryover on beans, and it's just do you describe them as a burden?
Certainly do. No doubt the soybean, record projected ending stocks are burdensome. No doubt about it. And again, that is contingent upon a favorable production number, coming through out of South America, and we'll still trade weather and all of those things. But we've been building this situation this over the last a year or so, and it just becomes increasingly concerning as we really aren't start to see any relief in terms of where those extra stocks are going to go, frankly. And so, we talk about, usually we can count on China to step up and especially as we get the kind of correction in U.S. values that we've seen here, usually we can count on those folks to step in here. And they too have a burdensome stock situation over there, Chip, but you also have some real concerns about economic activity over there.
Yeah, definitely. One of the things that I've been trying to figure out is just how much attention we need to be paying to the news coming out of China with the stimulus efforts and so on. And this feels like another turning point for the U.S.-China relations and what that trade partnership is going to look like going forward, isn't it?
Well, there's a couple of things there, right? The first one is that it seems as though, the more that the Chinese central bank announces that they're going to try to provide different forms of stimulus, it seems to be having, at least today, more of a negative effect as it relates to how our commodities react to that. Perhaps just the Chinese government demonstrating how challenging their situation is over there today. And, there's always more questions than answers, it seems, as it relates to economic or any other information for that matter coming out of China. But the fact that the Chinese government is being as aggressive as they are as it relates to invoking or adding some stimulus and also talking about it suggests perhaps that things are a bit more challenging over there than what most market observers would think. And so we have that challenge for sure. And also in times of economic uncertainty, you also get a little bit of a money flow to the US dollar. And so that also, starts to work against you a little bit, obviously, as it relates to being competitive on the export front here. So I think the combination of those two things starts to create even more of a challenge to build market share or to take off some of this burdensome supply into that market. And then the whole next chapter of the discussion as it relates to U.S. and China trade policy and the politics involved with all of that is also quite challenging and as uncertain as ever, as we're 3 weeks from our election.
Right. All right. Hey, you know what? I got to go back to Brazil here real quickly. Some people are wanting to back away from the expectations of expansion on acres in Brazil this year. Are you in that camp?
Yeah, I would be. I think
Okay.
I think there'll be less expansion or growth of acres, which would be a normal phenomenon as we see world prices correct here just a little bit. They would do the same thing that we would think about doing, which is maybe limiting a little bit of reinvestment, but mostly focusing on increased productivity and efficiency on the assets that we control today. So yes, I do think that we should see the rate of increase in production, at least as it relates to acres, slow down there just a little bit. But it is worth observing as we reinvest in existing assets, we do have a tendency to make those more productive as well. And so
Yep.
Mother Nature has a lot to say about such things. But just like we pointed out earlier, we can be as productive on 4 million less corn acres here in the U.S. With decent weather and improved investment. The same thing can happen in South America.
Okay. All right. Well, here we are. We're halfway through the month of October when we are determining the fall crop insurance price. What do we need to be thinking about there, Pat?
Yeah, you're right. So far, the average price is $4.24 on corn versus the $4.66 spring price. $10.32 on November soybeans versus $11.55 spring price. 9% lower on corn, 11% lower on soybeans. Got a couple weeks of averaging here yet, but I do think it's important as all of us are thinking about our risk management plan and execution that we are finalizing this piece of the puzzle. And so as we settle in, we've got a couple more things now that we can move from the unknown to the known category, and a couple big ones. First of all, we're obviously able to lock in what our production numbers are going to be for this year, and then in addition to that, start to figure out what impact your crop insurance plan can have or would have on your risk management plan. And so, as those two become knowns versus unknowns, it's incumbent upon all of us to take some time during a really busy time of the year here and make sure that we're thinking about what needs to happen next. And we are seeing some real nice opportunities from a basis opportunity like we talked about earlier in this discussion, but also seeing some decent opportunities to manage carry as well. And so would certainly welcome the opportunity to visit with folks about all of that. But there certainly is some things to consider as it relates to basis management and locking in carry and moving more things from the unknown to the known category here, and making sure that we have a plan to execute on some of this market volatility that we're seeing today.
Yep. Boy, you're right on the edge of the strategies that you want to be using and that you're talking about with clients here. Is bean market in particular is a market that you look to sell strength in? Is that kind of the bottom line?
Well, yeah, and we just saw it, right? I mean,
Yeah.
we just had a real nice move here on the last weather scare. It'd be pretty rare if it's the first and the last weather scare, right? So there's and the market has demonstrated its desire to remain reactive to those things. And so, if you have, there's been a lot of beans that have moved to town right off the combine here this fall. We had a nice little rally going into the 1st of October here, and it's obviously sold off a little bit since then. But if you've sold a few beans over the last couple of weeks, maybe this isn't the worst spot to think about a reownership strategy. And so, so this volatility that the markets are offering, Chip, do provide some opportunity. And again, I think it takes just taking a little bit of time to think through all that, I think is pretty important.
Yeah. Yeah, I'm with you. One of the things that I always enjoyed when I was dealing with marketing strategies on a regular basis was the guy that would take time from the middle of a day in the middle of harvest and say, listen, I've got a checklist that I want to go down through with you just to make sure that I've got everything covered. And those
Absolutely.
phone calls can be, they can be so, number one, the potential returns from a phone call like that, guys, to somebody like Pat, to just talk through that mid-harvest strategy and to make sure that you're where you want to be, the returns on that can be so valuable. The other thing is you're just making sure that you've got things covered. It's so reassuring to go through that conversation. So pick up the phone, talk to somebody. All right, Pat, before we run out of time, a couple of minutes left here. Give me your thought on what's going on this cattle trade.
Yeah, thanks for bringing that up. We've seen 187 or so cash cattle trade here. We had been seeing a pretty positive basis environment here for a while, and that's settled back here some. And I find myself starting to consider, as heavy as these cattle have been, are we now kind of showing the feedlots a little bit of an incentive here to put maybe even more weight on these cattle with margin over feed where they're at and all that stuff. So that'll be interesting to see how that plays out. But would just like to make the observation, more importantly, that this box beef trade, beef demand, still in spite of all of the things that we might be just a little bit concerned about as it relates to economic activity, particularly domestically, we're only down about 1% on production when you consider the heavier weights coupled with some importation of feeder cattle from both Mexico and Canada. And we're still, and then when one considers the amount of beef that's getting imported year over year versus what was an export program not so long ago, we're actually putting 1 or 2% more beef into this domestic market, and box beef values are hanging in there real strong. So good testament to protein demand in general, but a cattle complex here that trading at historic levels. So
yeah,
buyer beware.
Buyer beware, and maybe think about getting a price floor in underneath this market. Pat, these conversations are always valuable. Thank you so much, man.
Thank you.
You bet. Pat VonTersch, Professional Ag Marketing. Cary Artac, Artac Advisory is up next.
The chickens have come home to roost. Find out whose fence they're perched on today on AgriTalk.
Every Monday afternoon, we get a chance to talk with Cary Artac, Artac Advisory and WickedStocks.com. Cary, it's good to talk to you again this afternoon. How are you?
I'm doing great, Chip. Thanks for having me again.
You bet. Glad you're here. Don't forget, if you go to artacadvisory.com, that's ARTAC advisory.com, you can check out what Cary does on the commodity markets. And if you would like to see what he does on the equity trade, go to wickedstocks.com. He'll get you a free trial at both of those. All right. Kick us off with Dees corn, Cary. What do you got?
Yeah, December corn. We closed today at 408 and a quarter. I've covered this in the last few shows because we've been at a critical turning point, a pivot point for the broader corn futures markets. Last week we had channel resistance around, I think I forgot the exact number last week, it was around 421, 422. We need to close above that by a 1% margin, wasn't to be. And in fact, today's sell-off settled the market below a 6-week rising channel bottom. So we've got kind of a double show of weakness, unfortunately, essentially a continuation of this 1-year bear trend that is defined at 425 even this week. That rising channel bottom is 423 even. So you've got a 2-cent range above the market to sell into, to set hedges into. And I think this one is like through the rest of the year. I could see Dees 24 corn falling to 379.5 by its expiration. The broader corn futures market could continue south into the mid 340s as we move into next spring. 344.25 is a big area on the weekly chart. If, however, we can close above 425 even at the end of this week, and at this moment doesn't look likely, but stranger things have happened. If we can close above 425 even, that actually shifts the entire technical focus to the upside. Recovery then expected to 460 within 1 to 2 months, and as we move into next spring, 505 even would be anticipated. But right now, it is a sell upside pullbacks dynamic, as it has been now for a long time in the broader corn futures market. On to November feeder cattle. November feeder cattle and the broader feeder cattle market threw off a meaningful buy signal about 5 weeks ago above 241.37. We closed today around 249.5. I've got our first objective, at least for the November contract, has been reached, and that is a descending channel top at 250.12. We've been testing it now for the last week. It's been holding. We haven't fallen away from it, but just know that if we're unable to close above 250.12 at the end of this week, this market can ease back to 241.37 by November expiration. And while we're talking November, I need to talk about January as well, which we'll be rolling into in a couple of weeks. January has an identical channel top at 248.47. January is priced a little lower by a couple handles than the November contract. And if January can close above 248.47 at the end of this week, it enters a secondary buy signal that should, over the next, well, possibly by January expiration, yield the upper 260s. When we had the buy signal 5 weeks ago above 241.37, I'd mentioned to subscribers that over the following 3 to 5 months, we could return to long-term resistance in the feeder cattle at 268.25. And I still think that's true. And if January can close this week above 248.47, it actually could reach that 268.25 level by its January expiration, where the broader feeder cattle market could top out well into next year. We've tested that area twice in the last year, and it's held beautifully each time. Downside, 241.37 remains in reach below 250.12. Talking November feeder cattle, 241.37, able to contain broader market selling through the rest of the year and into next spring. And if we were to close below 241.37, that does pivot the market aggressively south as we move into winter, spring. 225 even, then likely within 2 to 3 months, 209.5 in reach as we move into next spring. But we're not in that scenario right now. Right now, I think this looks, it's a bullish market, secondarily so with a settlement this week above 250.12. And finally, stock pick for the week, Microsoft. Yeah. Everybody knows Microsoft, symbol MSFT. We had a buy recommendation on this in August when we were testing a 2-year channel bottom. Then was it around 388? We're right around 420 right now. That channel bottom is at 408.25 this week, rising about $2 a week. Solid bottom picking area for Microsoft as we move well into next year. I do think this thing looks like about 500 and climbing. The channel top, the 2-year channel top, is at 500 and rising about $2 a week. So that is our long-term objective. That could be like into the second quarter of next year. Solid 25% move from the low 400 area. On the way up, 436.75 is in reach over the next few weeks. Can contain buying on a monthly basis. And this is for those people who are unable to bottom pick the low 408 area. We might not see that again. If we close above 436.75, that is the next buy signal on strength, where we should then continue on up to that 500 mark within about 3 to 5 months or so. If over the coming weeks we close below that 408.25 level, all bets are off. I would actually expect about 350 within about 2 to 3 months. But right now, very well-defined bull trend in Microsoft, and you can bottom pick away at 408.25, climbing about $2 a week. And that's really all I have, Chip.
Yeah. Okay. Yeah, it's not that long ago that Microsoft was in that 465, 470 range. It was, the idea of getting back up to that level is it's not that hard to generate in my mind. So good stuff.
That's true.
Good stuff.
Just last July.
Yeah.
That's right.
That's right. All right, buddy. Thank you. Appreciate it. We'll talk to you next week.
You.
Yep.
Talk
Cary
to you soon.
Artac. Artac Advisory and WickedStocks.com. National Weather Service, 6 to 10 day outlook. Above normal temperatures back to most of the country. The highest probability of above normal temperatures is Wisconsin, eastern Iowa, northern Illinois, northern Indiana, Ohio, and Michigan. So, boy, it's the odds of it being above normal are pretty good. We've got above normal precipitation expected through most of Minnesota. Southeast Minnesota is the exception. Western Iowa, Nebraska, Kansas, and points to the west of that. Near normal, just call it along the Mississippi River, and below normal expected in the eastern Corn Belt. Real quick on the 8 to 14 day, we've got the above normal temperatures sticking around, and more of the Corn Belt is covered by chances for above normal precipitation. All right, come back tomorrow morning, 10:06 Central. Conversation with Pro Farmer editor Brian Grady.